Good morning, everyone. So today I'm going to solve two questions from cash flow statement. So please pay more attention because very important questions. And we are going to revise a lot of points that we discussed in our previous lessons. So if you don't understand some important points, you have to refer back. That means you have to go back to my previous lessons. So what I discussed in my previous lessons, I may not tell you again. So question 1 first, it is given to a comparative balance sheet. It is given to a comparative balance sheet, and when you have this balance sheet, it's better immediately you calculate some increase or decrease of these accounts. So here we find that cash increase $11,000. This is the things immediately you have to do. Then accounts receivable decrease $5,000. Then inventory increase 2,500. Prepaid expense increase $2,000. Then land increase $55,000. Then building increase $60,000. Then accumulated depreciation $3,000. Then equipment 8,500. Again, we have another accumulated depreciation for equipment. It increased $1,000. Then for the accounts payable, it is our liability, increase $8,000. Then income tax payable decrease $1,000. Then bonds payable increase $55,000. Common stock increase $10,000. And retained earnings increase $58,000. So it's your job to calculate this kind of increase and decrease, and the formula is, I told you that formula is current year minus previous year. Okay, current year minus previous year, and we are going to record increase or decrease. And from here you have to find out who are the related with property, plant and equipment, who are the related with operating, and who are related with financing. So this is related with operating. Accounts receivable is non-cash current asset. It is related with operating activities. So operating inventory is related with operating. Prepaid is related with operating. Then accounts payable is current liability related with operating. Income tax payable related with operating. So last class I explained why they are related with operating. Then land is related with property, plant and equipment. That means investing activities, because it is property, plant and equipment. So property, plant and equipment is related with investing activities, and these are the property, plant and equipment. Then long-term liability is financing. Financing activities are related with long-term liability. And common stock also related with financing activities, because this is equity. equity related with financing activities, and retained earnings also related with equity. It is financing. It is financing. So you have to do these kind of things from the very beginning. So first I am going to solve the operating part. So these are related with operating. Now income statement, you know that income statement is related with also operating. So this part is also income statements also related with operating. Income statement related with operating, we know that. And we know that this net income is based on accrual basis net income. This is the accrual basis net income, $72,500. So we have to convert accrual basis net income to the cash basis net income under operating activities. And this is the solution format. Is the solution format. So first section is cash flows from operating activities. Now it starts with net income accrual basis. So this net income, we start with accrual basis, and the question give you this information. Question tell you that this is 72,500. So this is the accrual basis of net income, and we have to convert it. We have to convert it to the cash basis net income. So you have to convert it to the cash basis. Right? So we start with accrual basis, and we are going to convert it as a cash basis. And we have to follow some rules. First, we have to add it back. We have to add it back depreciation expense. Then we have to add it back. So if you don't know why we have to add it back depreciation expense, go back to my previous lesson. We have to add it back non-cash loss, and we have to deduct non-cash gain. So now we have to read the question whether you have these three information or not, whether we have any depreciation expense or not. If we have any depreciation expense, we have to add it back. If we have any non-cash loss, we have to add it back. If we have any non-cash gain, we have to deduct from this accrual basis of net income, right? Now we'll go back to the question. So question said that we have depreciation expense. We have depreciation expense $3,000 building and $1,500 for equipment. So here 3,000 plus 1,500 equal 4,500. So our question said that we have depreciation expense and it is 4,500. So we have to add it back this money. We have to add it back this money. So we added back 4,500. So this part is done. This part is done. Now we have to see whether we have any non-cash loss or whether we have any non-cash gain. So now read the question again. It is mentioned here. Second part of this question, I mean additional information, you can see that here. Question said that companies sell equipment with a book value 3,500. Okay, so how to calculate the book value? It is mentioned here. how to calculate the book value. So book value equal cost, okay? Book value equal cost minus, less means minus, cost minus accumulated depreciation $500,000. Okay, so from here we are going to compare book value versus market price. Book value versus market price. So cost $4,000. First cost $4,000, accumulated depreciation $500. So the book value is 3,500. So the question already gave you what is the book value. Book value is 3,500. So we find the book value. We find the book value. Now question said that you sell this asset. You sell this asset and from market you receive $2,000. Read the question again here. The equipment sold, book value 3,500, and the question tell you how they calculate book value. It is cost minus accumulated depreciation, and they receive $2,000 cash from the market. So they sell equipment for $2,000. So the market price is $2,000. Now compare these two. You sell your equipment, book value is $3,500, but from market you receive $2,000. So you have a gain or loss? Loss. So we have a loss. And the loss amount is 1,500. 1,500. So this loss is called the non-cash loss. Why non-cash loss? Because you can see that the cash part belongs to equipment. You sell equipment and you receive cash, right? You sell equipment and you receive cash. So the equipment is property, plant, and equipment. So this $2,000 cash you receive is related with property, plant, and equipment. You receive $2,000, right? This is property, plant, and equipment. But loss is transferred to operating activities. Loss is we transfer to the operating activities. So as it is a non-cash loss, it decreases our net income. This one, you can see that it is given here. So this loss $1,500. Decrease our net income, but cash do not decrease. So we are going to add it back. So we added back $1,500. Now this question do not have any gain. So we delete it. Okay. So your question may be either you will have gain or loss, something like this. But this question we don't have any gain, so we delete this part. So we find that we start with accrual basis net income. Then we added back our non-cash. So depreciation expense is non-cash expense. Depreciation expense is non-cash expense. So we added back 4,500 and we added back our loss. Then we have to find out how many non-cash current assets we have, because these are the operating activities, accounts receivable operating activities, inventory operating activities, and prepaid operating activities. Then we have income tax payable and accounts payable, they are operating activities because they are current asset and current liability. And we find that our accounts receivable decrease. So what is the meaning of our accounts receivable decrease? Our accounts receivable decrease means we receive cash or not. We receive cash. So accounts receivable decrease $5,000. It means that we receive cash. So as we receive cash, we are going to add this money. Increase accounts receivable. Increase accounts receivable $5,000. So we done accounts receivable. Then go to the inventory. So accounts receivable decrease, not increase. So accounts receivable decrease. Decrease accounts receivable means we receive this cash, right? Then what about the inventory? Inventory increase. What is the meaning inventory increase? That means that you buy inventory and you pay cash, right? To the suppliers. So it is something like minus increase inventory. We buy inventory and we paid cash, so it is minus. It is 2,500. 2,500 minus. Then we find that we have another prepaid expense is related to the operating activities, and it is also increased. Again, prepaid increase means you pay cash in advance, right? Prepaid increase means you paid cash in advance, so increase prepaid expense. Increase prepaid expense means you paid cash in advance, so minus. So these three are the current asset, right? These three are the current assets. So what I told you last class, if current asset increase, okay, it means that you pay cash. Cash is not with you. And if current asset decrease, that means cash came to you. Okay, cash came to you. The opposite relationship. Look at here. Plus means we receive this money. Why? Because current asset decrease. Current asset decrease means we receive this money. Current asset increase means we paid this money. Opposite, right? Then let's see the current liability. Accounts payable increase. What is the meaning of accounts payable increase? Accounts payable means you are liable to pay this money. And this amount increase means you are holding this money, you not yet paid, right? Your liability increase means it is other people money, but holding by you at this moment. At this moment, you are holding by you. So plus increase accounts payable. So your liability increase means you are holding other people money. It is $8,000. $8,000. Now we find that we have another liability, it is decreasing. We have another current liability, it is decreased. What is the why your liability decrease? Why your liability decrease? Because you paid cash, right? You paid cash, so your liability decrease. Do you understand? Your liability decrease because you paid cash. So it is minus. Decrease income tax payable. So income tax payable is your liability, it is decrease. Decrease means you pay cash. So we find that, and we don't have any other non-cash current asset. According to this question, we have these three non-cash current asset. We have these three current liabilities, and they are the operating activities we already put here. We already put here. We don't have any other things for operating activities. So operating activities start with net income, and it is accrual basis. Now operating asset end with cash basis, with the cash basis. So what is the amount here? We have some plus, we have some minus, and after do it is $86,000. Do you understand? So you start with net income. We added back non-cash expense. We added back non-cash loss. Okay. Then we adjust our current asset and we adjust our current liability. So current asset increase means cash is not with you. Current asset decrease means cash converted and come to you. Current liability increase means you not yet paid cash, cash is with you. And current liability decrease means you paid cash, so your liability decrease. So doing this kind of plus and minus, we find the operating activities cash is $86,000. So we done our operating activities. So next section is about investing activities, and I already told you that investing activities are about property, plant, and equipment. Property, plant, and equipment. Again, property, plant, and equipment increase means you pay cash. Property, plant, and equipment decrease means you receive cash. Now we are going to see from our question. Question said that property, plant, and equipment, this one, land, property, plant, and equipment increase $55,000. Right? So what is the meaning? Meaning is land increase, right? You buy land. You buy land, and but we are not sure. We are not sure whether we pay cash or not. Who tell you? Who tell you whether you paid cash or not? Additional information. Look at the additional information about the land. Additional information about the land. So number 3 is about the land. Number 3 is about the land. Number 3 said that this is the land, right? This is the land. So if I copy this one and ask you what is the journal entry? What is the journal entry for this? What is the journal entry for this transaction? You purchase land in exchange of bond. What is the journal entry here? You buy land, land debit is $55,000 and credit is bonds payable. Credit is bonds payable, $55,000. So do you understand this? This is the journal entry. This is the journal entry for these transactions. Now tell me whether it is cash flow statement or not. We buy land, our land increase. We said that our land increase. Our land increase, but according to this question, we did not pay any cash, right? So it is not related with cash flow statement. So if any student write like this, if any student think that we buy land, for example, when we buy land, we usually paid cash. If you do something like this, it is your mistake. Usually when we buy land, right? Usually when we buy land, we pay cash, right? We pay our cash. We pay our cash. So if you do this for this transaction, it is our mistake. Why? Because although we buy land, you can see that although we buy land, but we did not pay any cash, right? We did not pay any cash. So long-term bonds payable is our long-term liability. It is also increased. It is also increased, but it is not related with cash. So we have to delete this. We have to delete this. Do you understand? I just deleted it. So according to this question, land, this part is not related with investing activities because it is non-cash. We have another property, plant, and equipment. We have another property, plant, and equipment, and it is building. Okay, it is building. Let's see What is available information for the building in the additional information? You buy buildings. You buy building, look at here, a building costing $60,000 was purchased for cash. What is the journal for this? A building costing $60,000 was purchased for cash. What is the journal entry? We buy building debit. Building debit $60,000. $60,000, and question said that for cash, so cash credit. Cash credit $60,000. So our land building increase, but cash decrease. Cash decrease means cash is now minus. Cash is minus. So this is related with cash flow statement. Why? Because compare these two, compare 3 and 4. Compare 3 and 4. So 3, we also buy land, an asset, and number 4, we also buy building and asset. But 3 said that we did not pay cash, 4 said that we pay cash. So it is cash flow statement. So go to the property, plant and equipment. It is now minus because we purchase land. We purchase land and we pay cash $60,000. Now, if you read the question, we have another equipment here. We sold equipment. We sold equipment. What is the journal for sell equipment? So question said that we sold equipment for $2,000. So what is the journal for this? You sell equipment for cash. So the journal here is you receive cash debit and equipment credit. Equipment credit. $2,000. So cash increase $2,000 here. So this came from here. You can see the question. Company sell equipment, right? Company sell equipment book value was $3,500, but from market they received $2,000. Do you understand? Company sell equipment book value $3,500, but from market they receive $2,000. So from market we receive $2,000 cash. Okay, $2,000 cash. So cash increase. So here cash is plus sell. So previous it was not land, previous it was building. Building, and we find that we sell equipment. Okay, we sell equipment $2,000 cash. So we record sell equipment. $1,000. Then the question said that equipment costing 12,500 also purchased for cash. Also purchased for cash. So you buy building, and you also buy equipment. So look at the journal entry like this. Question said that purchase equipment for cash. It is 12,500. So equipment debit. Equipment debit 12,500. And cash credit 12,500. So we know that equipment is property, plant and equipment. We buy it and we pay cash 12,500. So we are here. Purchase equipment. Purchase equipment 12,500. $12,500 and we pay cash. So it is minus. So we don't have any other property, plant and equipment. According to this question, we have 3 property, plant and equipment. You can see that. We have 3 property, plant and equipment. So building, equipment, and the land. So these are the 3 property, plant and equipment, and we are going to find how many property, plant and equipment we buy, okay, and how many property, plant and equipment we sell. If it is related with cash, then we put it under investing activities, cash flow statement. Clear? I repeat again, we have these 3 property, plant and equipment. What should you do? You should read the question carefully. You should find out how many property, plant and equipment related with cash increase and how many property, plant and equipment related with cash decrease. And we find this. We read the question. We find that building, we find equipment. Okay, we have another equipment. But we did not put here land because land is not related with cash. So we find that property, plant and equipment increase means cash paid. Property, plant and equipment decrease means we sell it and we receive cash. So if you do this kind of plus and minus, and it is about 70,500. And this is minus because negative item is higher than the positive. So we done operating activities. We done our investing activities. Now financing activities. And who are the financing activities? Financing activities are long-term liability and equity. So these are the items that goes under financing activities. So let's read the question. So this is the question again. We have long-term liability. How many long-term liability we have? We have 1 long-term liability and it is increasing. So what is the meaning of liability increase? Liability increase means it is other people money, right? Other people money holding by you. Now we are going to check it is related with cash or not. So we know that we have 1 journal entry here. We have 1 journal entry here that we buy land. Okay. So liability, it is increasing, right? Liability really increased, but it is not related with any cash. Do you understand? Usually liability increase means it is other people money holding by you, right? But it is other people money you are holding in the form of a land, not in the form of a cash. Clear? Yes, so this is not your financing activity. So some student may do mistake here. Some student think that liability increase means I am holding this money. Increase bonds payable. So some student will do something like this. They think that liability increase means I am holding this money, so it is plus. But the question said that no, your liability increase and you are holding in the form of a land, not in the form of a cash. So we should delete this. We should delete this. Although this is financing activities, but it is not related with cash, we delete it. Okay. Now we have any other long-term liability? No, we have only one long-term liability. Now we have equity, common stock equity. Now we find that common stock increased $10,000. Common stock increased $10,000. So we have to see whether our question have any connection or not. Question said that sell common stock for cash, right? That means you sell common stock and you receive cash. Okay. So it is plus. Plus, that means issue common stock. Issue common stock and I receive cash. Now I'm going to tell you one important point. For example, this is not given. This I delete it first. Look at this sentence. Issue common stock 10,000 for cash, right? For example, I delete this. And here I find that common stock increase. So if there is no other information belongs to additional information, okay, then you have to treat them as a cash. I repeat again, if there is no other information, okay, under additional information, we have to treat it as a cash. Anyway, our question is easy. Our question said that we issue common stock and it is related with cash. So don't worry. So it is related with cash. It is plus. Then do you have any other property? Do you have any other equity? Retained earnings, right? Retained earnings. And you should know that who are the components of retained earnings? Components of retained earnings are the net income and dividend. Right? The components of retained earnings are because net income transferred to retained earnings, then company paid dividend, right? Company paid dividend. Do you understand? So dividend here is minus item. Dividend here is minus item. Now we have to see whether company paid any dividend or not. The question said that company declared and paid, it is mistake here, company declared and paid dividend. Company declared and paid dividend 14,500. Okay, so cash minus, it means that our cash is minus. So this is financing activities. Dividend paid. $14,500. We don't have any other long-term liability. We don't have any other equity. So if we do plus and minus, If we do plus or minus, it is minus 4,500. Now we can see that we have operating activities, we have investing activities, and we have financing activities. Right? We done operating, we done investing, and we done financing. Now I told you that our answer is given in the question. Our answer is given in the question. So this is the answer. This is the answer. So here $11,000 increase, right? $11,000 increase. So this is the answer. Copy $11,000 here. And net cash increase, not decrease. Net cash increase $11,000. You can see that. Net cash increase $11,000. And how we calculate this $11,000? Current year minus previous year. What is the current year money? Current year is 27,500 minus previous year is 16,500. So current year minus previous year is $11,000. Now we can see that this $11,000 should be equal. That means $86,000. Okay, you can see that here. It should be $86,000 minus 70,500 minus 4,500. So $86,000 is the operating activities. 70,500 is minus from financing investing activities, and 4,500 minus from financing activities. So equal $11,000. Look, 86,000 minus 70,500 minus 4,500 should be also $11,000. It should be equal. Okay, it should be equal. So in the exam question, you no need to show me this kind of workings. In the exam questions, I no need this kind of workings. Only this is the solution. Only this is the solution for the exam. Okay, let me solve second question. So again, whenever you will find the question, do this kind of calculation. So cash increase or decrease here, cash decrease $15,000. And for your information, this is the answer. This is the answer. $15,000 minus is the answer. Now, what about accounts receivable increase or decrease? Accounts receivable increase $11,000. Then inventory increase $20,000. Inventory increase $20,000. And we know that this is operating. Accounts receivable is operating, inventory is operating. Inventory is operating. And equipment is property, plant, and equipment. Equipment is property, plant, and equipment, and it is increase or decrease, $8,000 decrease. $8,000 decrease. And accumulated depreciation, current year is higher, previous year lower, $3,000 increase. Now, accounts payable is current liability, so operating. operating. Income tax payable, operating. Bonds payable, financing. Common stock, financing. Retained earnings, financing. And we have to find out net income and dividend. Because retained earnings related with net income and dividend. So we find that accounts payable increase or decrease. Accounts payable decrease $12,000. Then income tax payable increase $4,000. Then our bonds payable liability increase $10,000. $10,000. Then common stock, no change. $0, no change. Right? $0, no change. And retained earnings increase $3,000. Yes. Now we have to solve the question. We have net income, accrual basis net income, and we have some additional information. Anyway, we are first here. So net income. So operating activities start with accrual basis net income. Question give you this information, $28,000. Then if we have any depreciation, okay, if we have any depreciation expense, we have to add it back. If we have any non-cash loss, we have to add it back. If we have any non-cash gain, we have to deduct. Now you have to read the question whether this information are available or not. Okay, so first you think about the formula. Okay, depreciation is a non-cash expense, it should be added back. Non-cash loss should be added back, and non-cash gain should be deducted. And why this plus and minus? If you cannot remember, go back my previous lesson. Now read the question. We have any depreciation expense or not? Question says that we have depreciation expense $6,000, right? So it is added back. It is added back. It is added back. Now we have to find out whether we have any non-cash loss, whether we have any non-cash gain. So read the question. From here we have to calculate. From here we have to calculate whether we have any non-cash gain or whether we have any non-cash loss. Okay, so read this question and try to find out, try to compare book value versus market price. So you have to compare book value and the market price to see whether we have any gain or loss. Company sell equipment for $12,000 cash. What is the meaning? That means company sell equipment and receive this cash from market, right? Company sell this equipment and receive this cash from market. So this is the market price. Market price is $12,000. Now, what is the book value? Can you remember the formula of book value according to the previous question? Previous question from how to calculate this book value? Book value equal cost, right? Minus accumulated depreciation. Now, based on this information, based on this formula, what is the book value according to this question? What is the book value? So I repeat here again, book value equal cost minus accumulated depreciation. If this is the formula, read this question and try to find out what is the book value. Company sell equipment for $12,000 cash. That means company received this cash from market. The cost $15,000 and the accumulated depreciation $3,000. So what is the book value here? Also $12,000, right? Also $12,000. So we book value $12,000, and from market we receive also $12,000. Do we have any gain or loss? No gain, no loss, right? No gain, no loss. So as we don't have any gain or loss, so these two account should be deleted, right? These two should be deleted because we don't have any gain, we don't have any loss, so we delete this. We delete this. Now we have to think whether we have any current asset increase or decrease. And I told you that current asset increase means you do not have cash with you, right? And current asset decrease means cash came to you. Now read the question. Question said that accounts receivable is our current asset and it is increasing. So non-cash current asset increase means cash is not with you. So minus increase accounts receivable. Increase accounts receivable means this cash is not belongs to you. Then look at any other current asset. Any other current asset is inventory. Inventory is also increased, right? Inventory is also increased. That means this money is not with you. This money is not with you, so it is minus. Then we don't have any other operating from asset side. Let's see the liability. So we have two operating from liability side, current liabilities. So accounts payable is our liability. It is decreasing, right? Accounts payable decrease. What is the meaning? Why your liability decrease? Because you paid them cash, right? You paid them cash, so your liability decrease. So here, decrease accounts payable. Decrease accounts payable is $12,000. Now we have another current liability. Income tax payable is our liability, right? Income tax payable is our liability. Now liability increase. What is the meaning liability increase? Liability increase means you are holding this money and not yet paid to other. So as you are holding this money is with you at this moment, right? This money belongs to you at this moment, so it is plus. increase income tax payable. So you are holding this money. Now we don't have any other non-cash asset. We don't have any other non-cash liability. Okay, now we are going to find the cash basis net income. So you find that cash basis net income is minus. It is minus 5,000. Because we have some plus. So look at here. This is minus is higher. Minus. So these three items minus and another three items plus. So finally we find that we have cash basis and it is minus. So we done our operating activities. Now investing activities, it is related with property, plant and equipment. So you have to find out if our property, plant and equipment increase, it means that we pay cash. If property, plant and equipment decrease, that means we sell it and we receive cash. Now we have to prove that whether they are connected with any cash or not. We have to read the question. So we find that equipment is property, plant and equipment. And we have any information about equipment here in the additional information. First we sell equipment. Look at here. First we sell equipment, then we buy equipment again. Do you understand? We sell and buy. And how much related with cash? This $7,000 is related with cash, and this $12,000 is related with cash. Clear? This $12,000 is related with cash because you sell equipment and you receive cash $12,000. You buy equipment, you pay cash, right? So this is cash plus. This is cash plus. Okay. And this is cash minus. This is cash minus. First, we can write the plus one. Sell equipment. So sell equipment and we receive cash $12,000. Purchase equipment and we pay cash. We pay cash $7,000. Purchase equipment and we pay cash $7,000. So we don't have any other property, plant and equipment, only one. According to this question, we have only one property, plant and equipment, right? And by buying and selling, you will find that the balance is $8,000 because you buy something, you sell something, right? The balance is net decrease. This is the net decrease, $8,000, because in between you buy something and you sell something. So your net decrease of equipment is $8,000 anyway. So we don't have any property, plant and equipment. Okay, so we done this part. We done this part. And it is plus $5,000. Plus $5,000. So we done operating activities, it is minus 5,000. We done investing activities, it is plus 5,000. Now we have financing activities. Who are the financing activities? long-term liability and equity. So equity means here dividend anyway, and common stock. Let's see. Bonds payable. Bonds payable is a long-term liability, And we find that our liability increase. So liability increase means maybe we receive this money, right? And we have to read the question whether there is any information or not. Is there any information about bond? Number one, don't have any information about bond. Number two is about dividend. Number three, not bond. Number four is not bond. Yes, so look at it. I told you that this is a special case. This is a special case. Okay, this is the special case. Why this is special? Because we find that our liability increase. Liability increase means it is other people money holding by you, right? Holding by you. So as there is no other information here, you can see there is no other information. There is no other information. If you do not have any other information, it should be related with cash. This is the concept you should remember. Okay, this is the concept you should remember. So we read the additional information. We read additional information and we did not find anything about bond, right? But here balance sheet said that bonds payable increase $10,000. So we should assume that it is related with cash. So go to the financing activities, it is plus sign. Increase bonds payable. Increase bonds payable $10,000 plus. Okay. Then we have another financing activities, common stock, but here it is no change, right? No change. That means you don't need to write anything for this. No change. But we have a dividend related with retained earnings. Question said that company paid dividend $25,000, right? Company paid dividend $25,000. So financing activities minus paid dividend. So you pay dividend, so it is minus. It is minus. So after plus and minus, we don't have any other financing activities. We don't have any other financing activities. After doing plus and minus, it is 15,000. It is 15,000. So we find financing activities is 15,000. So we find operating activities. We find financing, investing activities, and we find financing activities, right? So three activities we already find. And we know the answer. What is the answer? Answer is $15,000 minus, right? $15,000 minus. So we put here $15,000 minus. This is our answer. This is our answer. And you can see that operating activities is minus $5,000. Then financing activities is plus 5,000. And investing activities is minus 15,000. Try to understand here. Operating activities minus 5,000, right? Then investing activities plus 5,000 and financing activities minus 15,000. So it is equal 15,000, right? It is equal 15,000. So beginning cash flow. So last year and the current year information of cash. So current year cash is $18,000 and previous year cash is $33,000. So it is from question. I just copied from question, this one. Current year minus previous year equal decrease. Look at this here. Current year minus previous year equal decrease, and we prove this from here. So this is the solution for question 2. So try to read this and solve this by yourself again and again at home. Maybe next class I will solve another 2 questions. Okay, that's all for today.